We've got our next management with us, Surabhi, Hatsun Agro.
Yes, absolutely. So let's straight away get to it. The next company that we are chatting with, Hatsun's margins were hit by dairy inflation. The company's gross margin has come down to a 24-quarter low. RG Chandramogan, chairman of Hatsun Agro, is with us now. Mr. Chandramogan, good morning. Thanks very much for joining in. So let's get the big elephant in the room out of the way. This inflation that we've seen in milk prices, I think it impacted your gross margins to almost 300 odd basis points. What's happening now in the first quarter? Milk prices, have they started cooling off? And what is the outlook you can give us on margins given the trend in raw material inflation?
See, raw material inflation has been very high in the last 1 year, but it has started softening from the month of April. So April end, we are back to normal. And the commodity prices are comparatively coming down a little, by about 3 to 4%. So it gives an indication that the inflation, the top of the inflation we have already seen. And the price corrections, whatever we have to do, we have done it. So going forward, we expect a normal year, similar to prior to COVID. COVID 2 years, and subsequent to COVID, it was inflation and other things really hit. We are back to normal. Hopefully this year will be.
So your gross margins were about 27%. What will they be? I mean, when you're projecting a normal year, like pre-COVID, where would they be for in FY24, sir?
Probably it should be 3% more compared to the compared to the last year, because things are getting better.
So about 30% gross margins.
We can look at.
Okay, so that explains the margin picture and how at the EBITDA level you should be better off. Let's talk about the top line demand, volumes. What are the trends that you're seeing into the first quarter as we've kicked off this year, and what's the expectation on volume growth?
See, because of milk inflation, there is some slowdown on the growth of milk. Milk is growing at a comparatively lesser pace, but ice cream and curd is growing comparatively much better and faster. So overall, probably we will be able to grow as a combined effort better than last year. But probably it is too early to predict for the whole year, because just now only we are getting out of the shocks of inflation and other things. So market has to cool down and settle down.
So maybe just the first quarter, if you could give us some sense on volumes. To what extent were volumes impacted in Q4 on milk specifically and your overall total volumes? And what do you envisage for, let's say, Q1 or the first half of the year?
No, Q4 probably the volumes have been comparatively stagnant, you can say. But Q1 of this year, probably volumes are stepping up. But we are only in the middle of it and things are improving. Normally, once when you are adjusting the price for inflation and increasing the price, market will take about a month to settle down and then start giving a small increase. So all these corrections have been done in the fourth quarter, and we are now set with the first quarter of the year. So this first quarter, probably slowly we are coming out of all the problem. And the inflation is behind us. Inflation is not hitting us anymore. And the inflation can deflate a little over a period of June, July, in our opinion.
Okay, all right. So if you could just give us some more color. I know it's a difficult year because things are shaping up. There is a recovery in sight, but what kind of a top-line growth you're unable to give us? But at least we can assume double digits? Early teens? Double-digit growth is definitely positive in terms of revenues. And in terms of margins, early teens are possible, 12-13%, that is gettable?
No, probably I don't want to say anything right now because we are only on the recovery track and probably I will have a better conviction by June end. But definitely things are improving, that I can say.
Okay. So we'll take improvement as of now, and at least double-digit growth is what you're working with. Now, in the last 4 years, your gross block, I see, has gone up because you have incurred some capex. I think close to around 1,500, 2,000 crores approximately. I want to understand from these revenues that you're delivering of around 7,500 crores, what is the potential, the peak revenue potential, because you've undertaken some capex?
So you said the double digit, minimum double digit.
No, so I'm asking, peak potential, sir. Peak potential, not what you're doing currently, but at optimum levels, given the kind of capex that you have done in the next few years. I mean, what could be the peak revenue potential?
This year, probably the peak revenue potential is something like 8,500 to 8,700.
Okay, all right. Not just for this year, sir. Going by the current investment that you've made, without incurring too much of capex, can you go to 10,000 crores? Can you go to 11,000 crores in terms of a potential?
Current investment, we can go up to 10,000 crores with minor balancing investment. Minor balancing investment may be required, but the main components are capable of delivering 10,000 crores revenue.
Okay. Okay. That is the capability, not what you're saying you will do, but what you can do with the existing, with some investments, as you say.
As we are just coming out of inflation, it is too early to commit.
Of course.
But we are on the track and we are looking forward.
Yes. No, I just wanted to clarify that. Sir, this lumpy skin disease, are we seeing the back of it now, or that is going to continue to be a factor in FY24 as well?
No, it's a history. No more the problem is existing, and probably we have come out of all that.
Okay, it's all behind. And you said that compared in milk, you're saying there is a bit of a slowdown, is it? A milk demand as compared to other products like ice cream, etc.?
Price correction, but probably it has also started recovering. So we are only on the transition as of now, but the transition is positive.
Okay.
Okay. All right. Sir, if you could give us a few more details. You were trying to go to non-South geographies, and I think you were targeting close to around 20%. Could you tell us what is the near-term contribution that you're looking at from non-South? And also I had another question. I'm looking at Amul, obviously very different market, but the growth in comparison to FY20 has been far superior. I mean, how come that's happening?
See, the private companies, probably they had their own issues compared to them. That's a different market and this is a different market. We are all using the risk capital, and the cooperatives have got certain advantages of using government help and infrastructure and other things. Say, certain unions, they have the advantage of using the subsidy. Certain unions, they have the advantage of using certain other benefits. We didn't have those benefits. As a company, we continue to grow. And last 2 years, we have been heavily investing, keeping the future in mind. And our capex has been done at the right time, where the capex was comparatively less for the capacity what we have built. Going forward, we don't want to compare it.
Got that, Mr. Rajmohan. Thank you very much for detailing all the, the various aspects at play in the business this time around. Really appreciate you joining us on the show. We do